Good morning, one and all, and I hope you are well. So, this morning I have two pairs on watch, and those are pound Swiss and dollar CAD. We have CPI data coming out of the UK at 7 a.m., and it is currently 6:35 a.m. as I speak. So, I will not be placing a trade, certainly not on these, certainly not on any pound pairs until after that news announcement has passed, because we do tend to get a lot of volatility with CPI data, particularly US CPI data. But anyway, let's break these pairs down for you. So, pound Swiss, this is quite a simple one, really. We do have a near miss to here. Okay, so we have this low, this very sharp low, a sharp move there. Okay, and we near miss to it. Okay, so obviously when many of these people would have been getting long, some of them would have put their stops below here or in this area. Okay, and when we have a sharp move like that, that is also where liquidity is sat even before this starts happening, because the sharpness can dictate how much liquidity has been placed there. So I wouldn't be surprised if at some point we gravitate back towards this low, that this low near missed too. But one thing we can see, irrespective of that, which is why I haven't got a ray line plotted here in the interest of keeping my charts clean and keeping my trades simple, is we have broken below this low. So we do have a near miss to this low. Okay. So we near miss to that area, we break below, catch people the wrong side of the market, and then we're clearly in a run of momentum to the upside. Okay, and given that there's kind of no inflection points on the way down here, it seems logical to me that the buyers will be looking to hold their positions all the way up to this area before anyone looks to get out of them. And I'm just looking for, yeah, that doesn't surprise me. What I noticed here, I was looking for an inflection point on the left. Okay, I was looking for a high such as that where there was a sharp move, and sure enough, we actually got it. Okay, I couldn't remember from memory what this pair actually looked like, but I'm not surprised that we have an area of consolidation here. Okay, either one of these two highs where there was an enormous sell-off. Okay, the reason I'm not surprised by that is because we have a 1, 2, and a potential 3 where this high near missed to that high. So when I see structures like this, and I'm, the first thing I'm thinking to myself is, okay, is there a high to the left which we near missed to? And there is. Well, the reason I'm not surprised by that is because given where we are, it seems logical that we would tap into that high, which this high near missed to, and then one of the reasons I was expecting to see that to the left is because of the low here and the near miss to that, giving me a clue that we'll likely push up to this area to complete this structure, and then potentially come down to take out this low, which this low near miss to, because that is a textbook example of what we typically see. Okay, so that makes that adds confluence to the potential long idea which I'm looking for today. Okay, let's delete all these squiggles. Okay, so let's zoom down and see, okay, well, if we are getting long towards this area, how do we get involved? You can see, yes, this does look a little bit bearish, but again, what's it responded to from the left? It's not responded to anything. Okay, there's nothing on the left of any significance to suggest, that this is coming to the downside. If it does come to the downside, it would likely be something like, maybe we would get something like that. Okay, to tap into, say, maybe there. Okay, it's not something I'm seeing as a long-term short, because it hasn't responded to anything from the on the left-hand side. Okay, so if we zoom down, you can see, what do we have? This is more clear on the 1 hour chart, but we have this, so price consolidated here, it broke out and it left a footprint. Okay, the sharp move down followed by the sharp move up, which just so happened to be the retest at the back end of that. Okay, so that would be a logical place where price would likely gravitate back towards, especially as this retest didn't break through it. Okay, and if many people here believe that what was previously resistance becomes support, they will likely have their stops just below there. Okay, which is perhaps partly why we're coming back down. Okay, we do have, this is where the pattern separation comes in. we have this. We do have this 1, 2, 3 structure there. Completed 1, 2, 3 structure with a bit of a middle section there. Okay, but again here we left a gap, so I'm not surprised that this 3-touch structure didn't complete, because this low left a gap towards here where there was likely liquidity, because this was this was a sharp move and it was the retest to that. So I'm not surprised that we've come back down. Okay, but also we do have to factor in that because this here is a potentially completed piece of structure. Okay, something really weird just happened. I've got a salt lamp next to me. Okay, I've got one of these Himalayan salt lamps next to me, and the light just dipped and then came back up again. Maybe that's something to do with all the renewable energy that we're getting our energy from. Maybe we're starting to get blackouts, but that's another story for another day. So because this is a completed 3-touch structure, okay, this could be a new structure in itself. So I'm not going to be looking to call the bottom here. Okay, I'm not going to be looking for a risk entry here, because when we have a completed piece of structure, even if when we have a complete piece of structure like this, and then price comes down to tag the low that we were initially anticipating it come down to tag, this could actually be something new. So you get tagged in, okay, price then does something like that, for example, and then this is actually a bear flag because this was actually a completed piece of structure, and then potentially that bear flag gives this the legs to come down to there, to perhaps near miss to there, and then we get that larger structure that I was talking about, where all of this then becomes part of this larger structure. So this is called pattern separation, what I've been doing there, and it's quite helpful for determining where one structure ends and another one starts, particularly when price is quite corrective, which it will help you on corrective pairs such as pound Swiss. Now, one of the theories, another reason is that we are starting to build, the more volume we build here, the less likely what I'm looking for today is to shape up. Okay, so what I'm going to be looking for is an insurance entry, what we call an insurance entry. So I'm looking for price to tap into the area of value that it near missed. I'm then looking for it to impulse back up, and then I'm looking for a 3-touch correction or a 2-touch correction with a 3-touch structural approach on either the 5, 15, or the 1 hour chart, the 5-minute 15, or the 1 hour chart, and then I would look to get long on the break or within it. Okay, and then that would potentially confirm to me, okay, the impulse up. We get an impulse up here, followed by that. I'm satisfied that this high doesn't hold much weight, because we've likely washed out so much liquidity here that that bear flag that I was just showing you, that kind of if we move up correctively, then this is likely a bear flag to push lower. Okay, and as I said, I'm being mindful of how much volume is being generated here, because the more volume we generate, the less likely this is to shape up. Okay, but as it stands, I'll be looking for a tap into the area of value, an impulse back up, because the impulse back up would suggest that enough liquidity has been washed out for price to be able to move to the upside, and then the correction afterwards is usually the banks and the bigger players stacking their orders for the next wave to the upside. Okay, so that's what I'm going to be looking for on pound Swiss. I hope you've understood what I've been trying to explain there, but we shall see. As I said, because of the pattern separation aspect of it, this could be forming something more complex, but we will get a message from the market. That's why once you understand price action, you don't have to guess what the market is doing, because the market will show you. Okay, so that is pound Swiss. I have an alert set there. If that alert does not trigger, then obviously what I forecasted hasn't shaped up, and I don't need to check this pair. Okay, I don't need to try and convince myself that there's positions there that aren't there. I just let the alerts trigger, and if they don't trigger, I don't look at the charts. That's it. It's very, very simple. So dollar CAD, we have, okay, the first things that stand out to me is that, yes, this is very, if you're looking at this, you might be thinking, yeah, it's very corrective. It is very corrective, but again, you can kind of make sense of the structures. So for example, okay, if I was trying to make sense of the structure, let's have a look. We have we have we have this. Let's make sense of the structure, just because I have a bit more time on watch. Okay, I have a bit less pairs on watch. So we have this consolidation here, which caused price to smash through all of these lows. Okay, impulsively. So there must have been a big exchange of liquidity here for price to be able to do that without respecting these lows in pretty much any way, shape, or form. And we also have a slight near miss here to this high, implying once again that this is valuable. So what happens? We tap into that area, okay? We break above, we move to the downside. So we've likely washed out all that liquidity. So let's break it down a bit further. We then have a sharp move here, okay? And we move down very aggressively. We then leave a gap to that high, suggesting once again that this is a valuable area because of the sharpness of the move and the fact that we near missed to it. We then get to that area, and how did we get to it? We get to it by way of this structure, which has a middle section, and I'm sure on the lower time frames, yeah, we can kind of see the first point there. So we have the 1, 2, 3, which taps into the area. Then we move to the downside. Okay, if we just zoom in a little bit, so we've got that. We then have, what do we have here? We kind of near miss to that area. Okay, so this is not so good from a pattern separation side of it, but we do have this 1, 2, 3. We have an expanding pattern. These can act as reversals or continuations. Okay, we do actually, looking at it, we do actually tap into that. We tap into that area there. Okay, where there was a sharp move. We did not enough for us to break down, through these lows, but we do have a sharp move there, and we get there by way of a 1, 2, 3, a little scoop double top at the end, probably because we near missed to the area, and then we move down aggressively. Okay, literally just doing this on the fly. We then leave a footprint. Okay, so we have a consolidation here where there was enough of an exchange of liquidity to cause price to smash through that low there. Okay, and this consolidation there. We break above, which is often what we do. Is this visible on the daily chart? It's not visible on the daily chart, so not quite as valuable as the higher time frame liquidity points, but we break above. Okay, we move to the downside aggressively. Now, we do have to be careful here. Now, one of the reasons, so we've broken above this, okay, and I am looking for a short on this today. And one of the reasons I'm looking for a short is because if we look on the daily chart, or even on the weekly actually as well. Yeah, even on the weekly chart, you can see what have we done here. We wicked to the area, not through it. And these wicks, when they look like this, price often comes down to fill the wicks. Although, again, it doesn't necessarily have to happen straight away, but that does tend to happen. On the daily chart, we have a wick to the area and not through it. 4-hour chart, wick to the area and not through it. I believe it's the same on the 1 hour. Yep, we wick to the area and not through it. So the more time frames we see that on, the more likely it is that that low will be taken out. Okay. So with that in mind, what I'm going to be looking for today, however, one of the things to touch on is we have technically tapped that area. So it's not inconceivable that we could be getting long. We could be getting long to take out, to move into that area. Okay. Because technically we have tapped into that. I'm on the weekly. What does the weekly look like? The weekly's bearish, the previous weekly. So that makes that less likely, the long, but regardless, we're at this moment in time, we're correcting through this high, this area of consolidation. So in theory, this could be, some kind of larger structure to do that, where we get the volume. And then if we measured that, okay, and we assume the continuation leg out of the correction would be of a similar length, that would actually take us up to those areas. Okay. And if we measured it from the break up towards there, okay, so I wouldn't be opposed to that idea, but obviously that wouldn't be ready by the end of the day, that structure, because it wouldn't have formed by the end of the day, given that we're on the 4-hour chart. Okay, so where does that buy idea become invalidated? Given that we have had, a potential, we've whipped through that area, okay, suggesting we may have washed out the liquidity, and that this may be a premature evening star formation where we break below and then take out that low there, which we keep wicking to. So where does the buy idea become invalidated? Because that is where I'm interested in the sell. Well, the buy idea becomes invalidated below here because If we break below here, then not only would we be trading below here and back below this high as well, but we would have invalidated, this kind of buy structure that does something like that, and then retests this area, which this area only wick 2. If we do that, if we break below and we flag underneath, okay, not only would we be underneath all of this, would we have invalidated the buy structure and be back below here and below here, but this would likely be the banks and the bigger players stacking them orders for the next wave to the downside. Okay, so what I'm going to be looking for on this pair today is the following. Oh my God, look how many brushes are on the chart. Let's get rid of that for a second. So what I'm looking for is a impulse down below the area of interest, so here. And in this instance, I'll be looking for a 1 hour structure just because of the size of this move so far. Okay, I won't be looking for, so I'm looking for my corrections to be proportional to the move down which has preceded them. If I'm looking to get short, what I'll be looking for is a break below here, a 1 hour structure, 3-touch 1 hour structure, or a 2-touch 1 hour structure with a 3-touch structural approach. Okay, up to the first touch, and then I would look for a risk entry within the structure. I'm not looking for anything on the break, just because the risk to reward down to that area where we would likely get a lot of profit taking, even if we did continue in the forecasted direction, would be capped. Okay, so I'm only looking for the risk entry within the structure, and also partly because if we were to measure this from the break, okay, something like that, we would actually only have about 1.5% to the low. Okay, so by looking for the risk entry within the structure, I'm able to manage it down to this low a lot better, this sharp move there. Okay, if price formed something larger and started responding from that area and forming this kind of larger structure, I'll be able to manage it down to there if that was to happen. Okay, so hopefully that makes sense. So that's what I'm going to be looking for from these pairs today, and we shall see if anything shapes up. As I said, none of my entries have shaped up for a very long time, but I don't care. I'm always looking for ways to be able to increase the amount of entries I get, but not at the expense of compromising my risk. And if nothing's shaping up that I've learned to see or that makes sense to me, I'm not going to trade it. It's as simple as that. I'm not here to gamble. I'm here to profit, be profitable, and treat this game like a business. So anyway, I hope you've enjoyed this video, folks, and I will see you again in the next one, which will likely be made tomorrow, which will be Thursday. But for now, have a great day, and I'll speak to you again soon.